Hey there, financial navigators. Welcome back to the channel where we demystify the markets and uncover unique opportunities. Today, we're diving into a fascinating corner of the market, exploring the world of hard-to-borrow stocks and what makes them tick. Specifically, we're putting a magnifying glass on TokenCat Limited, ticker symbol TC, a company operating in the communication services sector, known for its advertising agency work and omni-channel automotive marketplace in China. This one has appeared on our hard-to-borrow screener with some truly eye-popping numbers. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Let's get into the specifics of TokenCat Limited, or TC. This company, formerly known as Tuanqi, focuses on an omni-channel automotive marketplace in the People's Republic of China. Beyond that, they also dabble in electronic equipment trading, technical support, and consulting services. With a market cap of $60.09 million, TC is what we'd consider a smaller cap stock, often susceptible to significant price swings. And swings it has seen. Looking at the recent price action, today TC is down -1.7%. But don't let that fool you. Over the last 5 days, the stock surged an incredible plus 24.59%. Zoom out a bit further, however, and the picture changes dramatically, with TC plummeting -75.16% over the last 30 days. Show chart TC 30-day price action. This volatility tells us there's a lot of action and interest in this name. Volume-wise, today saw 278,145 shares traded, which is quite low compared to its 30-day average volume of 2,520,454 shares. That gives us a relative volume of just 0.1x average today, suggesting it's been a relatively quiet session despite the overall volatility. What is cost to borrow and why it matters? So, why are we talking about TC today? It all comes down to something called the cost to borrow, or CTB. For those new to short selling, it's essentially the interest rate, or fee, that a short seller has to pay to borrow shares before selling them. Think of it like renting a car. You pay a daily or weekly fee for using someone else's property. The higher the demand to short a stock, or the fewer shares available to borrow, the higher this fee goes. These fees are often annualized, which is why you can see rates that seem incredibly high, sometimes well over 100% or even 500% annually. It simply means that if you held that short position for a full year, that's the percentage of the borrowed capital you pay in fees. A high CTB is a critical indicator because it directly impacts the profitability and risk for short sellers. If the cost of maintaining a short position becomes too high, it can force them to cover regardless of their conviction. Why this stock is hard to borrow right now. Now let's talk about TokenCat Limited's specific situation. This is where it gets interesting. TC currently boasts an astronomical cost to borrow fee of 867.2% annualized. Highlight this number. That's almost 9 times the value of the stock just to borrow it for a year. What's even more telling is the momentum behind this fee. It surged by plus 824 percentage points over the last 5 trading days. This isn't a gradual increase, it's an explosion, signaling intense demand from short sellers and critically low supply. And speaking of supply, there are currently only 30,000 shares available to borrow for TC. To put that in perspective, the estimated float for TokenCat Limited is around 7.3 million shares. Only 30,000 shares out of 7.3 million are available for new short positions. Our internal composite squeeze score, which combines factors like CTB level, CTB momentum, shrinking borrower supply, float size, volume/price momentum, and technical setup, currently stands at 54.3 for TC. While a high CTB doesn't guarantee a squeeze, it's a huge red flag for short sellers. It could also mean short sellers have extremely strong conviction that the price will fall, so they are willing to pay these exorbitant fees to stay in their positions. Squeeze mechanics explained. So, how does a short squeeze actually happen? When someone short sells a stock, they borrow shares, sell them on the open market, hoping the price goes down. If it does, they buy them back at a lower price, return them to the lender, and pocket the difference. But if the price starts to rise, they begin to lose money. Now add a sky-high cost to borrow and an extremely limited supply of shares like with TC. Short sellers are paying a fortune just to hold their positions. If the stock price continues to climb, and brokers start recalling their borrowed shares, which they can do at any time, short sellers are forced to buy back shares in the open market regardless of the price, just to close out their positions and stop the bleeding. This forced buying creates a chain reaction. As more short sellers cover, it pushes the price even higher, trapping more shorts and forcing even more buybacks. That, my friends, is a short squeeze in action. Dilution risk check. Before getting too excited about squeeze potential, we always run a dilution risk check. Dilution happens when a company issues new shares, which increases the total number of shares outstanding. This can effectively water down the value of existing shares and, importantly for a short squeeze thesis, it creates more supply. More supply means it's easier for short sellers to cover their positions, offsetting or even negating any squeeze pressure even when the cost to borrow is high. For TokenCat Limited, our tech found no recent diluted SEC filings such as SMINIS1, SMINIS3, or 424B in the last 90 days. We also found no recent reverse splits for TC in our look-back window. This is a positive for a potential squeeze thesis, as there isn't an immediate threat of the company flooding the market with new shares. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Given TC current situation, what should you be watching if you're interested in understanding this dynamic? Firstly, keep a close eye on the cost to borrow. Will it continue to climb even higher? Any further increases suggest even more pressure on short sellers. Secondly, monitor the shares available to borrow. Will that critically low supply of 30,000 shares dwindle further, potentially to zero? Chart borrow supply. Third, watch the volume. While today's volume was low at 0.1x, its average, a significant surge in trading volume, especially if accompanied by strong upward price action, could be the spark needed for a more intense squeeze. Remember, the last 5 days saw a plus 24.59% jump after a steep minus 75.16% drop over 30 days, indicating incredible sensitivity to buying pressure. Finally, our composite squeeze score of 54.3 suggests there's potential, but it's not at the extreme end, meaning careful monitoring and understanding of the underlying fundamentals are crucial. So there you have it. TokenCat Limited, ticker TC, is a stock with some incredibly intriguing metrics right now, particularly that eye-watering 867.2% cost to borrow and the razor-thin supply of borrowable shares. While a high CTB is not a guarantee of a short squeeze, it certainly sets the stage for potential fireworks if the buying pressure intensifies. As always, do your own diligent research, understand the risks involved, especially with smaller, volatile companies like TC, and consider consulting a financial professional. If you found this breakdown helpful, please hit that like button, subscribe for more in-depth market analyses, and let us know in the comments what other hard-to-borrow stocks you'd like us to investigate next. Stay smart, stay safe, and happy investing.